market commentary for Thursday, the 7th of November 2019. Wednesday had a quiet feel about it, with both equity and FX markets really struggling to find any great direction. The main topic of conversation was the signing of the Phase 1 trade agreement between the US and China, originally scheduled for the now cancelled APEC meeting in Chile. It seems like these two superpowers were struggling to agree on a new venue. Surely that couldn't be too much of a barrier to overcome, with both Sweden and Switzerland being touted as potential solutions. However, they got the markets a little concerned that maybe something more sinister perhaps was lurking behind the failure to agree. A brief but sharp sell-off in US equities late day on Wednesday was overcome, but it certainly showed how nervous the market was. So the question was, how would Asia react as the new day began? Well, the answer to that would be nervously. Dollar yen was sold down from 109 down to 108.65. We had euro yen dropping from 120.55 down through major support at 120.35 to a low of 120.14. The market was acting scared on nothing but rumor. And then a headline the market was not expecting. China agrees with the US to lift existing trade tariffs between the two nations in phases. Dow Jones futures immediately jump 150 points. European stocks hit 4-year highs. Dollar yen rips higher from 109.19. 108 rips higher to 109.19 from the previous low 108.65. And we had euro yen trading all the way back up to 121.11. And euro dollar bounces from an earlier low of 110.55 up to 110.90, and we had gold dropping from 14.92 to 14.82. As a lesson to be learned here, one must always be very careful when trading rumors, especially when the exact opposite might be true, as was the case here. The US day will begin with a different focus initially, the Bank of England interest rate decision and MPC minutes. As expected, rates are unchanged. However, this was not a unanimous decision, with two MPC members opting for a rate cut. Sterling immediately drops against the dollar, down from 128.55 to a low of 128.06. The subsequent press conference from Governor Carney really just underlines the usual irritants to the UK economy, with cables stabilising around 128.20. Nothing particularly exciting from that particular news conference, but the fact that two MPC members voted for a cut caught the market a little off guard. Next up, we had the US equity market open, and the Dow Jones immediately jumps 250 points to a record high. And FX and commodities will take their lead from equities, with the dollar rallying across the board. Dollar yen rallied up as high as 109.48, and euro dollar falling down to a low of 110.37. Sterling obviously had already had its move from the earlier Bank of England interest rate decision and remained fairly stable around the 128.20 level, but gold would drop like a rock down to a low of 14.61. Higher yields, higher stocks, and a higher dollar leaves the yellow metal with very few friends on Thursday. But now from the US equity market close comes the headline traders didn't want, or at least certainly were not expecting, and this came from the White House, that the rollback of China tariffs faces internal opposition. There wasn't too much in the way of detail behind that headline, but it was certainly enough to catch the market off guard, and the Dow Jones dropped by about 80 points, and then we had dollar yen coming off its highs down to 109.25, and gold heading back up to 14.70. And so equities will close well off the best levels, but the Dow will be up 182 points on the day to close a record high. Euro dollar ends today 110.50, sterling 128.15, dollar yen 109.25. So all eyes on the news wires really for more trade headlines, as that really is the catalyst for the broad market moves at the moment. Just to end up with a little look from a technical perspective here. Yeah, we had a choppy 24 hours with the market reacting to rumors and headlines, but still the dollar has benefited overall. US yields have risen as investors dump bonds and buy equities, or renewed hopes of a full trade agreement between US and China. Today's chart is an hourly dollar yen chart, with the S&P overlaid in orange, and even on an hourly chart you can see the correlation there is pretty strong. Today's equity rally took us through resistance strong resistance of 109.30 up to a high just shy of 109.50. As you can see, really moving in tandem here, the orange line and dollar yen peaking out. But that late day headline about internal resistance on the rollback of tariffs, as you can see, had them both come back a little bit lower, and for dollar yen, that took us just below the that original line of resistance, which took a little bit of a gloss off the move higher. What I did suggest in the commentary last week, there have been some divergence in this relationship between dollar yen and equities, in particular the S&P. I think you can say, looking at a shorter term chart, which this is really, if you look pretty carefully here, that correlation does seem to be well and truly back on course, but obviously it is an equity-led correlation with dollar yen doing the following. So definitely worth keeping an eye on this over the coming weeks, and with equities really to lead the way. And with that, I shall bid you all the best of luck with the last day of the week, and look forward to speaking with you soon. Cheers.